Thank you for being in the morning show. Generally, startups go and in various rounds go to private equity funds to go for their next valuation and their next raising of money. You have done something which is very different. You have gone to a large company which is also a major player in the retail space. So, what was the reason?
The way we think about this business is I think we are building a new format of retail over the next 10 to 15 years, where I think consumerism is only getting quicker for a lot of customers. Everybody wants stuff delivered to them a lot faster. And I think one of the best conversations that we have had over the last couple of years time has been with the Reliance Retail team, which was able to not only what you call go ahead and paint a picture of the way they see the world, and I think there were a lot of synergies in terms of how we were seeing the world and how they were seeing the world. I think the interesting parts were also where suddenly with this strategic partnership, I think over the next 5 to 10 years time, the size of business that we were planning to build, right, most likely goes ahead and doubles because of this relationship. Because there are multiple facets to it. The first one really is in all the cities in the country, we suddenly can go ahead and run on top of the existing Reliance Retail supply chain. Right, and make sure that customers get what they want on a daily and a weekly basis, delivered to them within 15 to 20 minutes time. And I think that existing supply chain allows us to go ahead and start becoming more efficient in every city that we launch right at the top itself. The second one was, of course, I think we can also partner with them on their omni-channel play. We will work with more financial investors, what you call over the next 5 years time, right? But at this time and scale, I think it was important for us to be able to work with somebody with whom we could go see a common 5 to 10 year horizon.
I mean, you were saying that it changes the speed at which which you can now grow. So could you give me some examples of that? I mean, I know I think you were in 7 cities and you talked about, doing 20 cities. So you were looking at a very, moderate growth expansion in cities. How will that change?
So we have two big businesses, Surajeet sir. One is us going ahead and delivering in 15 to 20 minutes, the quick commerce, daily and weekly essentials business. That we will be in 20 cities by the end of the year. Right. Initially, we had planned about 15 cities, but we think with an existing supply chain from Reliance Retail, we can get it to 20 cities. And then the B2B business, which allows to use the same delivery supply chain by every other local merchant in the country out there, right? And that we believe will be in about 50 cities by the end of this year. And over there, I think the Reliance partnership and to be able to go ahead and bring a bunch of their omni-channel traffic onto this delivery platform will go ahead and help. So all of these numbers are close to 30 to 50% bigger than what we were thinking for the end of 22 because of this partnership.
What is the number of SKUs will you have in this? Because to me, the issue is that the SKU is very limited to a certain amount of products and you don't get. And the other thing one sees is that you do not get the kind of discounts which you would have got if you would have waited for maybe not 15 minutes, but end of the day or next day.
I think the SKUs that we will stock will be anywhere from about 2,500 to 3,000 odd SKUs. We also keep running a lot of experiments, Surajeet sir, where I think we get to learn about customer behavior. Like, for example, right now we are running something around Valentine's Day to be able to say as to, again, I think consumer behavior is getting to be extremely instant. And so on a day like Valentine's Day, how can we go out and get customers things that they want instantly delivered to them? Similarly, we are looking forward to Makar Sankranti. And so the number of festivals, etc., that exist in India, you are able to go ahead and tune your selection based upon what customers want. I think the idea is to not be able to offer a hypermarket kind of what you call selection, because that is never going to get profitable in this form factor. The only way to get profitable is by going ahead and making sure that you have a very sharp selection that customers go ahead and buy very frequently with you. I think we have looked at customer behavior, right? Looked at search data. We have gone ahead and looked at customers entirely what they buy in a month in their households, right? What we have realized is there is a big 80-20 Pareto, where about 20% of SKUs end up causing 80% of the GMV. or the what you call share of wallet with our customers. And so what we are shooting for is we are shooting for those 20% of SKUs that we will go ahead and make sure are in these warehouses available all the time. And people can buy and get them delivered in 15 to 20 minutes time. This category, I'll be honest, Surajeet sir, is going to get created out of convenience and not necessarily discounts. Right? It's the same reason why you were buying from your local mom and pop store. Right? You weren't buying from them because of discounts. You were buying from them because of convenience, because of this 30 to 45-minute commerce category that they would go ahead and fulfill. So either you call them up and they would deliver it in 60 minutes time, or you would go there, or you would send somebody from the house and you would get that in 30, 45 minutes time. That transaction was never discount led. That transaction was always convenience led.
You had earlier talked about going for an IPO and taking the company public to raise funds. So how is that moving for you now?
Cool. So our IPO plans are really only in 24, not anytime before that, right? What you will see us, you'll see us raise capital from the private markets and the PE investors that you spoke about before this over the next 3 to 6 months time itself. Right. And that will go ahead and make sure that, we can go ahead and become the number one player in this category in the country over the next 18 to 24 months time. Once we become number one and at what you call over a couple of $1 billion of GMV scale, at that point of time, really in 2024 is when we want to go ahead and start looking at how we can go ahead and become public.
So if you look at your model, the GMV division will be what? From the quick service business and from the other your B2B business, what is the kind of ratio that you're looking at? And do you think it will eventually become a B2C platform and the B2B business will sort of slowly become smaller and smaller?
So I think as a split of GMV, today we are at about 70% from our 80% from our B2C business and 20% from our B2B business. What we are realizing is that the B2C business is growing much faster. Right. It's the nature of it because we are able to go ahead and market it a lot more aggressively. We believe that over the next 24 months time, we'll be 90% B2C and 10% B2B. It's also got to do with the nature of the transaction. Every B2C transaction is worth about 400 rupees. And every B2B transaction is worth about 60 rupees. So when you look at revenue split, the B2C one tends to become a lot bigger, much faster. So think of us right now as a business that is entirely focused on our B2C business and is incubating our B2B business.
Wonderful talking to you.
Likewise. Thank you so much.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.